Well, hello. This is Anthony Parent of IRS Medic, and we had a great podcast last week with Yael Lazar. So we decided to bring her back because we have something important to discuss. The IRS has released a press release. Let me get that up on the screen right now about how the agency will focus attention to wealthy to working class taxpayers, key change in coming to reduce burdens on average taxpayers while using artificial intelligence and improved technology to identify sophisticated schemes to avoid taxes. Well, Yael, with that title, how do you feel about this press release so far?
Oh, it was pretty interesting. I thought it was pretty funny. The lengths that they're going to now to close the tax gap and track taxpayers, stalking their social media accounts and using AI to compile all this wonderful data to check out your lifestyle and what's going on to see whether, you're one of those offenders cheating on your tax return.
Yeah, and it's sort of funny. And I was reading this. I really thought about what the root causes of the IRS's demise is, and sort of the agency that's so dysfunctional and says multiple things at the same time that can't possibly be true. And I was really thinking about this. And tell me if you just say it. And I thought might be the correct framework by which to take a look at what's going on with the IRS. That and it's the title for this is that, the IRS claims artificial, not actual intelligence is key to enforcement efforts. And I really think that's the key issue because I want to talk about when you and I started getting into tax resolution, how the IRS was. And I got to tell you, I miss greatly the greatest appeals officers that we used to have. And one in particular was a guy named Howard Smith. Howard Smith was amazing. He retired, I believe, in 2011. But this guy was thoughtful, hardworking, and practical. He would come up with solutions that were realistic, and he set the proper tone for all IRS collections because they knew, hey, look, the taxpayer might appeal to Howard Smith, and Howard Smith would truly be looking for solutions. Now, someone like Howard Smith retired, and have you known? Here's a question I have for you. Would you agree with that? And have you known of any new appeals officers that the IRS has had that sort of are your favorites as well?
I did have some of my favorites. I knew there were certain revenue officers at the lower level that I would never get anything accomplished with. And so I would purposely set it up to get to appeals because I knew I would be dealing with one of a handful of amazing appeals officers that would actually look to resolve the issue and come up with a creative solution that worked for the taxpayer and worked to promote the agency's, cause, obviously. Um, I cringe now. I'm not really, there are still some good appeals officers, but any of them new hires, no. I'm still dealing with some that are remaining that haven't yet retired. I am still dealing with that case we spoke about last week where I was transferred 10 times. I kid you not, I have called back 2 days in a row now, and they keep asking for different things, and I'm going around in circles. They wanted proof that my client was making that 401k loan repayment. And because the pay stubs we had submitted were dated in July, because that's how long I've been trying to resolve this. Now they're asking for August pay stubs, pay stubs that are less than 30 days. Now we're mid-September and I'm still not resolved. So I said, let me just give them the 401k statement, which shows that the payment is being made, that it's being deducted from the paycheck. The statement I have says last payment credited September 1st. So that's clearly within the last 30 days. You know what I was told? We can't, this is great, but because it's coming from the pay stub, we really need to see the pay stub because this document, the 401k statement, is something that you could have created yourself. No words. No words. So now I had to hang up. They gave me 5 more days to go back to the taxpayer to get August/September pay stubs. I can't hear you, Anthony.
You're hitting on a lot of things that I think this press release really, I think that's a perfect setup for what we have here. So let's go. What my plan for today is to read this press release paragraph by paragraph and have you and I discuss each paragraph to see what it really means and how it applies in reality. So let's go. First one. So uh, Dateline, September 8th, 2023, Washington. Capitalizing on Inflation Reduction Act funding and following a top-to-bottom review of enforcement efforts, the Internal Revenue Service announced today the start of sweeping historic effort to restore fairness of tax compliance by shifting more attention onto high-income earners, partnerships, large corporations, and promoters abusing the nation's tax laws. So we have an admission from the IRS. That's what I found so interesting here in the first paragraph. We have an admission from the IRS to say that, oh, well, there hasn't been a lot of fairness in tax compliance because, well, we want to restore it. So do you see the same sort of problem there?
I do. The irony, it's not lost. Fairness in tax compliance and high income earners. But remember, last week we talked about high income earners they were going after was 100,000 or more. Here it references 400,000. So which is it? Can you make up your mind? Are you going after the $100,000 plus or 400,000? Or are you just going to use artificial intelligence for the 400,000 plus people? I love when the IRS offers real clarity to taxpayers.
Absolutely, absolutely. I mean, there you go. That's in this one paragraph. We already found the contradictions. That, well, this isn't really it, and you're admitting that you have been abusing lower income earners, and you haven't been fair. But okay, let's move on to the next paragraph. I'm sure it's going to get better. The effort, building off work following last August IRA funding, will center on adding more attention on wealthy partnerships and other high earners that have seen sharp drops in audit rates for these taxpayer segments during the past decade. The changes will be driven with the help of improved technology as well as artificial intelligence that will help the IRS compliance teams better detect tax cheating, identify emerging compliance threats, and improve case selection tools to avoid burdening taxpayers with needless no change audits. Now, okay, so this is sort of the problem you have. Well, I thought you said that these people are cheating on their taxes. So how do you know they're wealthy? Well, the person cheating on their taxes, would you see high income? So how do you go after, you're going to go after high income earners to get the people not paying their taxes. And do you think artificial intelligence can help the IRS there, Yael?
Not to insult them, but I think maybe artificial intelligence would be better than the level of intelligence that's actually happening at the moment.
Yeah, ouch to that one, indeed. And this is what I would say to that is that we'll center on more attention on wealthy partnerships and other high earners that have been seeing sharp drops. Well, this is the thing left out of this press release. Why did the partnership audits all those reduce? They actually did, and there was a report out from the Treasury Inspector General explaining the terrible problem IRS examiners are when it comes to partnership audits. The issue is that when they have a partnership audit form in front of them, a 1065, what the IRS doesn't know is, well, where does this form, this tax return fit into the overall scheme of the taxpayer's overall interest, and actually who's the ultimate taxpayer? You might audit a partnership, but who's really involved and who goes up? Is there a partnership that the money flows to? Is there's one that's down? Now, sophisticated tax planners know this game. Setting up multiple 1065s is part of the tax planning game. That allows the IRS, it sort of frustrates the IRS from sort of figuring it out. So now I could see them using artificial intelligence in a way to try to, you get a whole bunch of data to say, okay, well, here's all the K1s associated to this taxpayer. And now we can figure out all the 1065s that they're coming from. Now you need to take a look of those all into combination, but you might have one partnership that doesn't have the same. It's just the person's a limited partner and they don't have a lot of involvement in it. And so that's actually the issue that the IRS is trying to combat, that they have not been auditing partnerships because partnership taxation is actually the hardest form of taxation. And while partnership taxation is difficult for tax professionals and clients, it's actually even harder for the IRS. And I think that's what we're seeing. And, this is a reaction to the tax code being so abusive. That's really what it is. And so tax code's so abusive. taxpayers create strategies to make it harder to audit. The IRS says, well, now we're going to audit who exactly with now it's because the problem is this, Yael. Partnership audit is still incredibly difficult. So where's the IRS getting the staff to go after that? And do you think AI something can help them with that?
Well, I think that they're definitely going to use AI to help them with that, right? Because you see, if you've ever played around with Chat GPT, you can see how quickly the information, a response is generated to your prompt, right? So if they can put in certain data about a partnership or certain income information or other information that they glom from different sources, it'll analyze it in the speed of light, right? As compared to having a human actually sit there and go through all of the data, the analytics, and try to form a conclusion from it. So I think it's definitely going to be a helpful tool for them. What I just find interesting is, the taking of information using AI to go through social media profiles and other avenues to find out information, gather up that data for AI to analyze. Big definitely watching now.
Right. So I'm going to move on here. Now, here we go to this. As part of the effort, the IRS will also ensure audit rates do not increase for those earning less than $400,000 a year, as well as adding new fairness safeguards to those claiming the Earned Income Tax Credit. The EITC was designed to help workers with modest incomes. Audit rates of those receiving EITC remain at high levels in recent years, while rates dropped precipitously for those with higher income, partnerships, and others with more complex tax situations. The IRS will also be working to ensure unscrupulous tax preparers do not exploit people claiming these important tax credits. Wow. Well, this is what I want to add to this as we go back to here. So again, well, what do you mean by earning less? Well, that's a huge jump. So under $400,000, or which one is it? Is it? And this is sort of thing. Someone who's claiming an earned income tax credit. Let's talk about that first. Let's talk about what this means. So the IRS is admitting the earned income tax credit audit are unfair, and this is what it really is that the IRS likes to audit earned income tax credits because these are low income people who are filing refunds, credits against that they're entitled to. The IRS loves these audits because these are audits that are all done by mail. And the taxpayer inspector general, no, I think it was a taxpayer advocate did a report on this, and she found out that I think it was about 40% of people under audit for income tax credits didn't even know they were under audit. That they were just sending it out there. Now, the IRS loves these audits because they're automated and people don't even know, because you're dealing with people who aren't sophisticated. And if you're getting an earned income tax credit, you really don't have the money to hire an attorney to fight you back for you, even if you have the greatest claim. You don't know you have a great claim. You don't know how to win. So the IRS takes this very unfair platform and it's been going hardcore at it. And here's the reason why, because the IRS wants statistics to show how good they are at auditing, to put fear of God into everybody. But who they're auditing the most are the poorest people, and they still are. They're finally admitting it here to a degree. So,
well, but what's interesting too is, those who are, like you said, getting this earned income tax credit are the poorest, right? Or lower income. They're not independent contractors, 1099, self-employed, right? They're getting a W-2. So what are you really auditing, right? They have the records that this is their W-2. It's on their wage and income transcript. I think what they're looking at is maybe the number of dependents that you're claiming, right? To see if those are legit, if you can claim everybody that you claim as a dependent. But still, if you go through the audit and you claw back some of the credit, I mean, is that really worth the IRS's resources as compared to those that are, 400,000 plus earners? Aren't you going to get a lot more back in auditing those and catching those that are, cheating or loopholes or not reporting everything or playing around with their expenses or whatever it is? I think it's a waste of their resources to constantly go after the working poor.
and here is the mission that they have been. They've been doing this for decades. And really, I look at it as a function of them losing that the real talent that they used to have. I mean, the IRS was loaded with talent. People did like working there. It was a place where a lot of people worked, but over the years, and I think for many reasons, it has been a less desirable place for the most talented people to work there. It's been incredibly difficult, the challenges that the IRS throws at people. And I think this is always something I say. If you hate the IRS, how do you think the IRS feels about the IRS, right? They have to deal with it more than we do. So they have the challenge of that. We're going to continue on here. So here we go. The new compliance push makes good on the promise of the Inflation Reduction Act. What a name that is, to ensure the IRS holds our wealthiest filers accountable to pay for the full amount of what they owe, said IRS Commissioner Danny Werfel. The years of underfunding that predated the Inflation Reduction Act led to the lowest audit rate of wealthy filers in our history. That's true. I am committed to reversing this trend, making sure that new funding will mean more effective compliance efforts on the wealthy, while middle and low income filers will continue to see no change in historically low pre-IRS audits rates for years to come. Well, everybody except the earned income tax credit filers, they'll still continue to get hammered because, hey, look, that is a great audit winning machine of the IRS. They're just not about to give that up. That gives them their stats of audits that they close. What would you have to add to this, Yael?
But the where was it that I just saw? Yeah, so I mean, based on last week's podcast, remember we talked about they were doubling the audit rate from like 0.5% to 1%, a whole 1%. I mean, think about the population of Americans and what 1%, actually represents, you know. So
And as we get to some of the numbers that the IRS is bragging about, I think it's a great idea to sort of keep in context. What do they mean by what these numbers that they're throwing out numbers to try to like, hey, look who we're going after. We'll get to those numbers in a little bit. I'm going to go to the next paragraph. The nation relies on the IRS to collect funding for every critical government mission, from keeping our skies safe. The IRS keeps the skies safe, just so you know, our food safe and our homeland safe. It's critical that the agency addresses fundamental gaps in tax compliance that have grown during the last decade, Werfel added. There is a sea change taking place at the IRS in every aspect of our operations, anchored by a deep respect for taxpayer rights. Sorry. The IRS is deploying new resources towards cutting-edge technology to improve our visibility on where the wealthy shield their income and focus staff attention on the areas of greatest abuse. We will increase our compliance efforts on those posing the greatest risk to our nation's tax system, whether it's the wealthy looking to dodge paying their fair share or promoting aggressively peddling abusive schemes. These steps are critical for the future of our nation's tax systems. Okay, well, so this is the thing I want to comment on here. There's a lot to say here. But
start with the members of Congress.
Yeah.
Review auditing their taxes.
Yeah, how about them? Can we get a little transparency, government transparency? Why don't we go after them? The point I wanted to make here was this: is we look at the problem is this: is that they keep using the word wealthy, wealthy. Look, if you have a fantastic tax planning tool such as a private placement life insurance policy, you could really be the wealthiest person on the world, and your tax liability is zero. 100%. You just need to file the correct things, have the right structure set up. Your tax rate zero. So auditing that wealthiest person in the world would result in zero tax liability. And there's this conflation between wealth and income. And we see it from the commissioner himself. Well, is this a wealth tax or is this an income tax? But it seems like, well, you're trying to make it more of a wealth tax because you keep talking about wealthy, not high earners. And it's two different things. And I think the reason why they are attacking wealthy is for basically for PR purposes.
Yeah,
class warfare is what the IRS works on.
You know as well as I do that the tax code is written to help business owners, and it's not really written for W-2 wage earners, right? So it's very easy if you're structured properly and have the right investments, like you said, like the life insurance, and they'll take money from the life insurance to invest in a property, and then you're paying no capital gains, you're paying, there's tons of legit, and I don't want to call them loopholes. It's the tax code. These wealthy individuals and companies are following the tax code. They're not doing anything illegal. They're just getting away with not paying any taxes because of the way the tax code is written.
And thank you, Aya. That's absolutely right. And this is what I would also say is that as I'm reading this press release and I think about all the tax strategies that we implement for our clients, I'm looking at this like, yeah, they're all safe. They're all safe. Because you're absolutely right. The tax code, the benefits are all for businesses. Not that it doesn't punish businesses, but businesses have the clout to go lobby Congress to get something that's going to help them out. Okay, that's just the truth. Individuals don't have that. Individual earners get hammered the hardest, and they have the fewest amount of tax breaks. As soon as you have business or real estate, hey, a whole world of opportunity opens up. And you can see, as I say, and as I explain to clients, like you might want to have a partnership because the audit rate is a lot lower than your Schedule C. And we could still see that I don't see they're threatening to go after partnerships, but are they really? And we'll see how many partnerships are going to go after and why it's really not the risk that you might think it would be.
I don't know. I'm involved in a partnership audit right now. First one in ever, honestly. It just started about a month or so ago.
Really?
Mm-hmm. It's a $15 million company,
There it is. So you got one of them.
I got one.
All right.
Mm-hmm.
Good for you.
All right, awesome.
I can't hear you, Anthony.
Okay, sorry about that. For the broader compliance work going across the IRS, this will be an expansive effort with more details to be announced in the weeks and months ahead. Key elements of this new effort include major expansion of high income, high wealth, and partnership compliance work. It seems to be going on. At least there was a partnership. There's at least one that you got. Prioritization of high income cases. In the high wealth, high balance due taxpayer field initiative, the IRS will intensify work on taxpayer with total positive income above $1 million that have more than $250 in recognized tax hits. Building off earlier successes that collected $38 million from more than 175 high-income earners, the IRS will have dozens of revenue officers focusing on these high-end collection cases in fiscal year 2024. The IRS is working to expand this effort, contacting about 1,600 taxpayers in this category that owe hundreds of millions of dollars in taxes. And I want to just sort of talk right here because this is what's going on. So, and I'll just talk about, because I have one of these cases, one of these high earners. And so in March of this year, a revenue officer who was fairly new was assigned to his case. We were already working on a resolution because here's the thing. We've been trying to solve his case for years. We offered an offer in compromise for the entire tax debt. We were just looking for a break on the interest and penalties. This is when in 2018, if my friend Howard Smith was there, it would have been accepted and this case would have been resolved. It would have been resolved a long time ago. However, that common sense that existed, that used to exist and used to permeate the culture of the IRS, long gone. The IRS rejected the offer. So we attempted to work the case. However, the revenue officer that was assigned to the case, and by the way, because the tax debt so much, you cannot call the main number at the IRS to work the case. You actually have to have a field revenue officer. She disappeared and we couldn't work the case with her. So we've been trying to resolve the case and the IRS wasn't there. And so this new revenue officer was assigned and she came in with full guns blazing, completely unaware of the long history of the case and the long history of the taxpayer's own efforts to get the IRS to sort of see reality. So now we're seeing this case. And so now what's going on in this case? Well, we have a strategy in place that we're trying to get to lower the taxes. And now there's more. I have an appeal coming up and there's more appeal coming up, more work going on, taking away resources from the IRS for their new cases that should have been working. And that's the problem that you have when you lack the ability to close cases effectively. You're creating a Ponzi scheme of more and more cases that you have to work on, creating more work, but you have your newer cases leading to a completely overwhelmed IRS. That's the reason why the true problem that the IRS has is a gutting of their appeals. The gutting of their appeals is the biggest problem they have that can't be fixed by throwing more people into their system. Yael, your words on
Yeah,
that.
it's funny. I have a similar case. Taxpayer owes, I want to say 1.8 million. I had a great revenue officer on the case several years back, pre-COVID. Got him into a monthly payment plan, 8,500 a month, and he was paying like clockwork. He's never defaulted, didn't create any new liabilities. The IRS defaulted the plan, and they admit it was their own internal system that did it, not through any fault of his own. My client was sending in, okay, I would never have done it this way, but he was sending wires to the IRS every month for his payment. Something happened where they had a glitch in their system. And now, because it's been years since the plan was set up, they won't put him back in that $8,500 a month plan, even though admittedly it was their computer error. So now they're saying it's being assigned to a revenue agent. Like, I don't think it's going to be the same amazing one we had years ago. And now I have to do all the financials all over again. And it was a miracle that we got the 8,500 that we got, because in my estimation, I was thinking they were going to want about 12, but he was willing to do the 8,500 and could justify it to his superiors. So now my client is screwed for doing everything correctly, right? And I can't resolve this case because it's in the queue to be assigned to a revenue officer in the field, but it's not. So I have my client voluntarily still making that $8,500 a month payment, hoping maybe they just leave him in that queue, like in purgatory until the CSED runs out, or he just, keeps making that payment. One day they'll wake up. But it's a little frustrating because you would like to have some sort of resolution, because technically, since he's not in a plan, what are they going to do to his passport, right? Systemically, they could report it to the State Department and freeze the passport. But you're in limbo, and I have this with a couple of cases. You can't resolve the cases. So they need to travel for business, but they can't because they can't renew their passport, because you can't get someone assigned to the case to resolve the case.
Thank you, Yael. That story is exactly the problem. The IRS creates so many mistakes, yet they're never accountable for their mistakes. They'll oh yeah, we messed that up. But however, we're the government, so we don't have to respond to you. And one of my favorite jokes is the Taxpayer Bill of Rights, because they had to have a second one, and it does nothing either. Neither one of them does anything. There are no rights. You're a taxpayer. You have no rights. And exactly right. You go into this purgatory hell where you have a problem you're trying to resolve, yet the IRS can't do anything about it. They don't have the resources to do it. So the thing is, if you're going to be collecting from someone, if you're going to ruin someone's life, you have to be able to be there to be responsive when someone says, well, actually, I did things right. And that's where I don't see artificial intelligence being able to help them at all. Is there going to be an artificial intelligence module to go through the IRS's inventory to say, oh yeah, here's all the cases we messed up on. Yeah, here's all the places where we totally dropped the ball and really, really hurt taxpayers and everybody. And it's just really, and this is what I would say about dealing with the IRS. It was a fun job when we started. We got great results all the time. And now those great results are harder and harder to come by because the IRS is so obstinate in dealing with that they don't even understand their own limitations. And here we could see the commissioners. I think he's off on a different planet. You have to fix your fundamental errors. That is, if the IRS makes a mistake, there needs to be an immediately way to rectify it that doesn't harm the taxpayer. And then this is my favorite notice that I'm sure you're getting a ton of, the favorite letter that you're getting of now. Dear taxpayer, we need 60 more days to respond to your inquiry, right?
What's really great about those letters, sometimes I'll get those in the mail, as the representative, and I'm like, thank you. You or your representative contacted us on such and such date. And I'm like, no, we didn't. We need more time to resolve and look into this issue. What issue? I haven't contacted you. There is no issue. I really don't know what you're talking about.
I have the winning case. The winning case I had with the most amount of, hey, we need 60 more days to respond. We got 4 of them. We got 4 of those 60-day letters to respond, and they kind of missed them too. They'll send the 60-day ones, but there'll still be a gap. And this was the issue. The IRS automatically assessed. It was, I think, 3 $30,000 penalties for failing to file a foreign trust. And we explained to the IRS, there's never been a foreign trust. There's no foreign trust. There has never been a foreign trust. The thing that you automatically assess the penalty on doesn't actually exist. So could you perhaps see your way to removing this automatic penalty of over? I mean, I don't think automatic penalties should exist for anything. Every penalty should be a human being. If you're sending a bill to somebody, a human being should say, yes, I'm responsible for this, rather than their automated process. Because when we think about what artificial intelligence really is, it's an automated process. Well, you're going to add artificial intelligence to automated processes that poop out errors left and right all day that the IRS cannot possibly respond to, that are the most comically absurd and insane penalties, consequential. And by the way, these penalties can revoke a passport. You're automatically removing people's passports when you are in error. And where is that being addressed by the commissioner here?
And you know what? I want to say, I'm in New York, you're in Connecticut, right? It's not just IRS, right? I got a client email yesterday thanking me for resolving her New York State issue. She finally got the refund back from New York State of $19,544. Are you ready for this? It came in 11 separate checks. 11. You want to explain why? I can't hear you.
If it was sales tax or something quarterly, okay, I could kind of see that.
No, regular income tax, 11 separate checks.
Yeah. Yeah, and right. Some of the biggest victories are
how did that happen?
Yeah.
You know? In 11 separate envelopes. 11 separate postage, right?
Yeah, some of the biggest victories we get are just simply getting the IRS to do what they're required to do under the law. That's all. Hey, great news! You hired me, you spent all this money, and we got the IRS to follow their own processes. Congratulations to us.
Yeah.
Oh, it's so bad.
We hold them accountable to do what they're supposed to actually do. Yeah.
All right. So let's move on to the next one. Okay, now here it is. Did we go over expansion of why does it say expansion of pilot? I think they have a typo there. Expansion of a pilot program, I think, is what they meant to say, focused on largest partnerships leveraging artificial intelligence. Well, does that mean who's leveraging the artificial intelligence? Anyway, the complex structures and tax issues present in large partnerships require a focused approach to best identify the highest risk issue and apply resources accordingly. In 2021, the IRS launched the first stage of its large partnership compliance LPC program with examiners of some of the largest and most complex partnership returns in the filing population. The IRS is now expanding the LPC program to additional large partnerships with the help of AI. The selection of these returns is a result of groundbreaking collaboration among experts in data science and tax enforcement who have been working side by side to apply cutting-edge machine learning technologies to find potential compliant risk in the areas of partnerships, tax, general income tax and accounting, and international tax and taxpayer segments that historically have been subject to limited exams and coverage. Okay, I'm going to laugh here. Okay, because I got something to tee off on that. By the end of this month, the IRS will open examinations of 75 of the largest partnerships in the U.S. that represent a cross-section of industries, including hedge funds, real estate investment partnerships, publicly traded partnerships, large law firms, that's nice, and other industries. On average, these partnerships each have more than $10 billion in assets. So I want to just talk about this one. I can't tell you the company, but it's very close to you. Okay. It is close to you. It's close to me, where they are located. This is a company, and it was a friend of mine who was their tax counsel. This company is definitely in the news. You would know about them. They're not known as great people. They're the main structure for their business is a limited liability partnership. Each year they file a 1065 and they have other entities as well. This LLP is it makes billions of dollars of money, transfers billions of dollars worldwide, has subsidiaries every which way. My friend also told me he took incredibly aggressive tax strategies and he was sort of mad. He said, well, here's the thing, Anthony, I'm sort of upset because I feel like my skills are getting a little rusty. I said, well, why is that? He goes, well, I've been there for 15 years and we've been pushing these aggressive strategies, sort of begging for an examination from the IRS because, we want to kind of see what we can, do. Did I say get away with? I was about to say get away with. Well, he said, yeah, we haven't been audited in 15 years. We haven't been audited in 15 years. I would say this is probably the wealthiest partnership I could think of. The numbers here, well, one of the wealthiest partnerships in the world. The IRS just didn't bother to examine it. And the reason why, and this is what, he says, like, well, I understand why the IRS doesn't want to examine us is because we would bog them down for years because that's our strategy. Our strategy is to bog them down with years with our various complicated strategies. And he says, I have my strategies that we really want because those are going to save us much, but I try a bunch of other things that I'm willing to give up. So that when the examination team comes, they can feel, hey, they can go to their boss, hey, look, we won on these issues, never minding the big issues they won on. So that's what he was sort of sad about, is that the IRS wasn't auditing his team, that he felt like his skills were getting rusty. He was really looking forward to them getting back there. And so here's the problem with what the IRS is doing. You might be able to identify what partnerships to audit, which could be good ones. But as soon as the IRS does, they have a huge problem. How do you close this case out? I have a much smaller client who has multiple partnerships, and that audit has been going on since 2015, and the IRS can't close it. And they have one of their most experienced examiners on it, which brings me to one more point. Because this examination included this examination did include a foreign trust. This is what really sort of shocked me as I was dealing with this revenue agent. She kept on saying, hey, I need a copy of those foreign trust returns. I was like, okay, well, I'll fax it to you again. She keeps on coming to me. Said, where is it? I said, do you understand the 3528 is the foreign tax return? And she's like, oh, yeah, I knew that. Yet that didn't stop her from assessing a penalty on the form because she claimed it was substantially incomplete. So she didn't even have the ability to know what it is, but that didn't stop her from penalizing. And then one more short story from this, I might have mentioned last week. I called one of the group managers around here to see how her international examinations were going. Now, she wasn't at large business and international. She was at self-employment small business, which also handled international audits. I said, well, how are they going? She laughed. She said, well, half my examiners won't touch them. And I said, well, why is that? She goes, because they're too complicated. I said, that's right. They're too complicated for the IRS, but you're going to dump that onto taxpayers. And so what we see is the IRS being hamstrung by their own vast complexity that they put on taxpayers. Taxpayers put it back to them. And what could they do about it? They have to deal with it now. The biggest problem the IRS has is the IRS. Have you seen anything like that going on, Yael?
Yeah, of course. I mean, their auditors aren't of the caliber at this point. They're examiners of the caliber of the tax preparers, the high level CPAs and these top firms that are deploying these tax strategies. They don't know what they're looking at necessarily, you know? So I think at the end of the day, it's kind of like being in litigation, right? Someone, to give a good example, all of the contractors who claim they got screwed by Donald Trump, right, in his days of contract, and he would never pay his contractors in full, right? There's no sense in suing the Trump organization if you're a lowly construction company, right? Because they will just bog you down in discovery, in legal documents, in requests, they just keep going and going and going, and the little guy just can't afford the legal fees and can't keep up, and then just end up settling for pennies of what they're owed. And this is almost, I think it's almost a little similar in the same, in the same case, because, your friend, whoever this partnership is, we'll just keep bogging them down with documents and documents and documents. The partnership return I'm doing now, I had sent everything the auditor requested in his second document request. He says, I have 2 other cases to go through. You'll hear from me probably by the end of the week. It's been 3 weeks, right? The sheer number of documents of what he requested, that what we provided, I knew there was no way he was getting through that in 2 days. It's 3 weeks. There's a lot of, journal entries, detailed ledgers, receipts, invoices for every penny, for every expense claimed on their return. And everything is legitimate on my client's return. There's not any, maybe 1 or 2 little things that they couldn't find an invoice for. $1,700 on a $15 million corporation. Okay. You want to disallow that, we'll pay you the $1,700, whatever. But that's part of the problem, right? If you bog them down with everything they ask for and then some, how long is it going to take him? And at the beginning, he said, oh, it's my intention to wrap up this audit within 3 months.
Oh God,
that's rich.
We're
rich.
through the second month now already, I believe. I think we started in beginning of June. So June, July, August, we're now to September. I think we're past the 3-month mark easily.
Yeah, great. It's a great point. And Yael, I think you bring up the exact point of why big businesses know their best return on investment is in their tax strategy, and that they know that that's where you put it. Now, the problem, and it's the problem for people who are entrepreneurs on their way up, and individuals, they're not looking at it the same way. They're not looking at as the most essential lawfare, because that's what it is. That a lot of these partnerships, when you're filing things correctly, you're actually setting a trap for the IRS. You actually set a trap for them. You sort of like, oh yeah, I want you to audit me. I want you to audit me because I can support this, and you guys can waste your time for years. And then at the end of this, guess what? I'm going to be due a refund. That's what you actually. That's actually how you set it up.
I was going to say, how many times have you done audits for clients that had all their ducks in a row, and at the end of it, the IRS actually owed your client money, right? Because you didn't take every deduction that you were entitled to. You were able to find a few more and whatever it was. And at the end of it all, it's like, okay, you're going to write me a check at the end of this all.
Yeah, so not only that, so you got a check, and now you send a message to the IRS. Do you think they're going to audit you again? They just wasted, because you get into these complicated audits. There's not one examiner. You have teams. You have specialists in the very, very small things. You have a team of people, and these are your highest level people, by the way. This is not into artificial intelligence. These are the scarcest resource you have at the IRS. These are people who are very, very difficult to replace. And as we were talking about last week, the IRS is hiring for attorneys in every state. This is something that's never been done. They have a shortage of this most talented resource pool that in this lawfare that firms can do, eat up those resources. Eat it up. It's as if they weren't even there, because you're just bogging down their time. And the reason why is because it's just turning the tables on the IRS. You want to dump a lot of complexity and compliance work on us? Great. Let's have some fun. Let's see how you guys are at this. And that's really where this is really the best strategy. As I said for years, the best strategy is to out IRS the IRS, because they can't handle it.
Yeah, but at the end of the day, you still have to be able to resolve cases, right? So you're doing all of these things, but to what end? Because at the end of the day, it's an extraordinary amount of time that we waste having to just communicate with them and get them to do and hold them accountable for what they're supposed to do and protect our clients' rights and close out the cases. Because at the end of the day, our clients want this problem off their back. And unfortunately, they kind of have us hogtied also, right? The inefficiency of it all, the inefficiency of the staff. And, I don't want to generalize it all. I mean, I've dealt with some great people at the IRS, but they've been few and far between lately. When we first started this back in 07, 08, it was much more enjoyable, and you were solving cases and closing them out on the daily. Now every case drags out, and it takes so much longer because their inefficiency, and post-COVID, our clients suffer because we're having to charge them twice as much just to deal with the inefficiency of long hold times on the phone, even on the professional, the practitioner line, being transferred from department to department to department, getting someone who's asking, well, I need this, but I called you the other day and you asked me for A and B. Now you're asking me for the next person that looks, puts their eyes on the case. Oh, well, yeah, we need A and B, but oh, you know what? I need C, D, and F. Well, but the other person didn't say that, you know? And so within the ranks, there's all that inefficiency because every time you talk to somebody, you're going to get a different story, a different request, a different, and it drags it on and drags it on and drags it on. And you know what? Honestly, I don't even know in some of these cases whether the CSED is told, right? Because at the beginning, like on this last case that I keep trying to resolve since June or July, right? It's coded on their transcript, pending installment agreement. So that tolls the statute.
Yeah, absolutely. That's a great point. Yeah, here it is. You know what? It's really easy to open new cases. It's closing them. That's the hardest part. And I think that's where they have been writing checks they simply can't cash. I mean, that's really it. Putting more making everyone's life miserable. But we used to get results. It was a daily thing. We get great results all the time. The IRS knew how to close cases out. Now that's an ability they lost. So maybe we need some attention there. Hey, let's really close out cases before you guys start going off on your new initiative. Why don't you close out what's in your inventory right now? Why don't you do what's there right now before you go on to more things? Because what's there right now isn't getting resolved. But now you're going to go to throw more into the pile when you don't have the team. You don't have the staff to do this. But again, the IRS is trying to, they're trying to really rule by fear and intimidation. And it's like, but the big, my clients aren't really worried about this. My big clients aren't really worried about this. What I'm worried about is the regular guy who doesn't see the IRS as the threat, and the person trying on the way up who doesn't do things right, who naively suspects that we don't have this completely ruinous tax regime. We didn't ask for this. We didn't really ask for this tax code, and we certainly didn't ask for this terrible, terrible administration of it. It's gotten so bad. Every day is a new low. Every day is a new low of what the IRS is going to do.
Although I have to say, on those rare occasions, their inefficiency have helped my clients. Right? I have this one woman. She's in her 70s, battling cancer for the third time. She owed over 400,000. Right? I had her uncollectible for a while. Then COVID hit, and it got to the point where half her liability fell off. Right? So now we're down to, as of yesterday, 226,000. By Christmas, I got to tell her yesterday, out of that 226, 175,000 is falling off. Right? So then she'll be down to less than 60,000. And she was a perfect candidate for an offer and compromise. Just couldn't get things moving, resolved. So at the end of the day, she'll have the same outcome as the offer and compromise. We just had to sit by and, let time do its thing, but they had their opportunity to try to collect on that 400,000, get her into a payment plan, do something. And it's just been sitting and sitting and sitting. No levies, no nothing, and we'll get to December. It's right around the corner before you know it, and, they're just waking up, but we'll get to it. And she'll walk away from at least 390,000 of her debt, at least.
It's so, and this is what I say. So you were able to get her. You were able to get her into some collection alternative before the IRS sort of dropped her. The problem is when people are trying to get
it. She's out of it. She's not in uncollectible. She's still just in collections at this moment because you're in uncollectible for 18 tops 24 months. She's not in it anymore. She's just in collections.
Oh wow!
Yeah.
Yeah, she's gonna make it. Yeah, I'm pretty sure they're not going to be able to get to her. Oh my God, that's amazing. So there it is. So and it's really because if the IRS had the staff, they would have gotten more money because you probably would have, if they were really there, like, yeah, we'll submit an offer in compromise, the IRS would have gotten more. And then your client would have had the benefit of at least not being in this purgatory of this. Well, what is it? And that's, people put, like people's lives are on hold while this is pending.
She's stressed out, right? So she's fighting cancer, but she's stressed out, always looking over her shoulder about the IRS because she's in this collection purgatory. But it is what it is. She'll get out of it, but your life is in limbo, and I think that's the worst for the taxpayers, is just never knowing if you're going to wake up one morning to your bank account being levied, or your pay stub being garnished, or your paycheck.
Yeah, not really excited about all these new revenue officers getting out there. All right, let's move on a little bit. Greater focus on partnership issues through compliance letters. The IRS has identified ongoing discrepancies, balance sheets involving partnerships with over $10 million in assets, which is an indicator of potential noncompliance. Taxpayers filing partnership returns are showing discrepancies in the millions of dollars between end-of-the-year balances compared to the beginning balances of the following year. The number of such discrepancies has been increasing over the years. Many of these taxpayers are not attaching required statements explaining the difference. This effort will focus on high-risk large partnerships to quickly address the balance sheet discrepancy. Prior to the IRA, the IRS did not have the resources needed to follow up and engage with all the large partnerships with such discrepancies. However, the IRS will soon have the resources and plan in place to ramp up this effort. It will begin in early October when the IRS will start making around 500 partnerships.
Mailing.
Oh, mailing around 500 partnerships. Depending on the response, the IRS will add these to the audit stream for additional work. Well, so the IRS is, and this is, a balance sheet isn't really an income item, right? It's not an income item. It's a balance sheet that helps you detect whether or not income may or may not properly be reported. So somebody could have a massive balance sheet problem, not even file one. It doesn't mean that the IRS doesn't necessarily mean there's any unpaid taxes, and in fact, the person could be owed a refund. So sort of a curious initiative, and I guess what it's designed to do, and tell me if you agree with this. This is just designed to scare people, to scare firms into saying, "Oh yeah, here, let's just pay more." Do you agree or disagree?
No, I agree. It'll be interesting to see what these letters look like. What they're sending, what they're asking for, what they're auditing, what they're, see how effective they'll be. Just think about it. They're mailing 500 partnerships out of how many partnerships are there in the United States?
Right?
Millions and millions.
Yeah.
Yeah.
I think I did. It's something like 5 to 10 million partnerships returns are filed.
So are they mailing the top 500?
Well, they're going to do it, right?
Yeah.
And
it'll be interesting to see what happens.
So priority areas for targeted compliance work in fiscal year 2024. The IRS has launched numerous compliance efforts to address various issues being seen. Some of these, like abusive micro-captive insurance arrangements and syndicated conservation easements abuses, have received extensive public attention from the IRS, by the way. They're the ones pushing it out there. And essentially it's this, that those two things which the IRS is keeping out there. It's cases in which people follow none of the formalities, and the IRS hammer on people who don't file any of the formalities as a way to discourage people from using legitimate deductions. So captives are great. The thing is, if you're going to use a captive, follow the rules. And if you're going to donate a conservation easement, follow the rules. You won't have a problem. So the IRS likes to find people who aren't doing it and saying, there it is. So be careful because these people are abusive and they're abusive, right? They're the ones. It's not the IRS who's abusive. They are abusive. Let's go down. But much more work continues behind the scenes on other issues. Among some of the additional priority areas the IRS will be focused on that will touch wealthy evaders include expanded work on digital assets. The IRS continues to expand efforts, including digital assets, including work through the John Doe summons effort and last month's release of proposed regulations of broker reporting. The IRS virtual currency compliance campaign will continue in the months ahead after initial reviews show the potential for a 75% non-compliance rate among taxpayers identified through record production from digital currency exchanges. The IRS projects more digital asset cases will be developed for further compliance work in early fiscal year 2024.
It looks like I'm going to be busy in that field next year.
I do believe the IRS is right. Because that they do have the ability to open these, and I believe that they believe there's all this income that they're going to find. Now, a lot they don't understand. Like people also have losses too.
They will, listen, I have a lot of clients that are in the cryptocurrency field, right? That say, well, how do they even know? It's in my wallet. It goes from the exchange to my wallet. They don't really know. Not all the exchanges are reporting. Coinbase will be reporting 1099s and some of the others, but there are other digital currency exchanges that aren't reporting, right? So they're like, how does the IRS even know? It goes from the foreign exchange to my wallet. But they're hiring the hackers. They hire the hackers, and the whole thing about blockchain technology that people don't understand, it's open, it's transparent. You do have to try to figure out whose wallet belongs to who, right? And trying to track that down. But I know that they're definitely working in this area, and they're looking at, people that became crypto millionaires overnight, when Bitcoin took off, when they had bought it when it was $300 or $3 or, I have through a client, a colleague of mine, he has a client, 25-year-old kid, lives in his parents' basement. You'd never know that this kid was worth $19 million. Right? Still living in his parents' basement, mother's still doing his laundry and cooking for him, But I don't know whether he's reported or not reported. You're always better off reporting and come up with strategies. There's so many things you can do if you have an LLC, right? You can purchase your crypto through the business and make several investments from there. You can certainly set up a charitable remainder trust, right? Where you set up the charitable remainder trust, you donate, let's say you make $1 million in gains, you donate that $1 million, from your wallet directly to the wallet of the trust, the charitable remainder trust. You're the income beneficiary for life. You're the lifetime beneficiary, where you get to control that money, and you can purchase annuities and life insurance, all these other things. At the end of the day, when you pass, you're not paying any taxes because it's going to a 501c3. You can purchase life insurance to make your kids or spouse happy that when you die, they're getting $1 million tax-free. You haven't paid tax on that $1 million in crypto gains. And in fact, you end up getting a deduction, a charitable deduction over a several year period. I mean, there's so many different things that you can do to shelter those crypto gains. And the IRS walks away with nothing.
Yael, that was awesome what you just said. And that I believe you're absolutely right. This is one instance because, a great client of mine, we were discussing, this was in 2016, we're talking about cryptos. Well, he's like, all it is a public list of links. If you think about it, it's a public list of secure links. That's all it is. So of course, and this is what I would say, if you think about what the IRS's capabilities are, for large systemic things, it's very hard for them to do, but to hire an outside contractor to say, hey, look, I want you to get your best hackers together and find up a whole list of people who you suspect would have give us a list of the people most likely to have big gains in cryptos. Then they can take that list to say, okay, now we can compare with what they filed. That I believe is totally possible and capable, because the IRS just has to hire one firm to get them one thing, and then it can integrate very easy. So opening up these returns is incredibly easy.
Yeah, and don't forget though, just because you have these crypto gains, the crypto gain is not a taxable event. It's when you sell it, or you exchange it for another coin, or you exchange it for something of value, like you're using your Bitcoin to buy a Tesla, things like that. Just because you have gains at this point, the way the tax code is written, that's not a taxable event.
Yeah, great point. Yeah, and what you that's and I think the IRS. So a lot of people will probably get they'll get audits and they don't have the gains, but then some people will. And what you said is absolutely essential. That when you're just buying yourself and you have no strategy, you are setting yourself up for disaster because exactly what you're saying. This is where the value of getting real tax help, a real tax strategy. You can make the money and keep the money. Or you can make the money, roll the dice, and when things go wrong, you lose it all, and your life is turned upside down, and nothing really goes right. And this is what I'm going to think. What you just said, I think, if you're game for it, would be a subject of a next podcast. I would love to talk about the upcoming crypto audits, and then really go over some of the best crypto strategies that you've used at Yael. If that would make sense for you next week.
I mean, think about it also, what people aren't aware of. There's a couple of companies, I Trust Capital, Directed IRA, that I use for small time investors who just want to get into crypto. You can purchase your crypto in a crypto Roth IRA, right? So you may invest 3,000 and that Bitcoin will then turn into, or some other altcoin could turn into hundreds of thousands of dollars. It's all tax-free because it's in a Roth.
Yeah. So there you go. So I think we're going to talk about that. All right. So we're going to move on, and we are going to be talking about. This is my favorite here. More activity on FBAR violations, and this is high income earners from all segments continue to utilize foreign bank accounts to avoid disclosure and related taxes. A U.S. person with a financial interest over a financial account is required to file a report of foreign bank account and financial accounts FBAR if the aggregate value of all foreign financial accounts is more than $10,000 at any time. IRS analysis of multi-year filing patterns has identified hundreds of possible FBAR non-filers with accounts balances that average over $1.4 million. The IRS plans to audit the most egregious potential non-filers FBAR cases in fiscal year 2024. And now I can tell you
that's your area of expertise.
Yeah. Let me tell you how this really works, and really how it works. So who the IRS, this is they're telling the truth, but who they're going after, it works like this. First of all, if you have let's just say you have $1.4 million in a bank account. Are you richer than somebody who has a pension, say, of $80,000 a year? The answer is no. No, you're not. The person who gets a pension is actually far wealthier than you with $1.4 million in a bank account. So that $1.4 million in the world actually doesn't make you rich if you're retired. It actually just makes you able to live. That's actually what it does. And so they kind of fail to identify that. And they fail to identify that that's actually most people's retirement funds are going after. Now, this is the way it works, is they find people who don't know that they had to file this form. And typically who they want to go after are people who are older and people who can't withstand an audit. So they come, and people who trust the IRS. And so the Large Business and International does these examinations because they're single issue examinations. They can open up an FBAR audit, and in 3-4 hours, they can assess a ruinous penalty that will destroy someone's wealth. They can do that. That's what they love to do them. And it's utterly, utterly sickening what they do. And Large Business and International, that's right. Large Business and International. And there was actually just a recent report where it showed that their favorite target was people making less than $100,000. So they're actually going after the smallest earners to assess them the largest penalties, some which may be paid, some which may not be paid. And additionally, if you actually look at the authorizing law for the FBAR, you're going to find something very interesting. If you look at 31 USC 5314, you're going to find something very interesting. Or an FBAR is not mentioned. What is mentioned is a report of your foreign agency transactions. The law further defines a foreign agency as a person, not a bank. So we have a situation where the regulations invent this entire thing. If we look at the actual law, it's not even there. But this is where the IRS is putting, the anger. It's like a vicious anger. Hey, look, we can't get the stats we want the normal way because we don't have the staff to audit these complicated things. Okay, well, guess what? We can get stats very easy. Why? How's that? Oh, we'll just assess these ruinous penalties against individuals who really had no idea what they were doing. And it's the FBAR is not related to your income tax. You could owe zero in income tax, and your bank account could lose money, and you could still be assessed. So this is utterly where the IRS is just bloodthirsty and so wrong in so many ways. And I do believe they're good for this. I do believe they are going to be going after more and more of these FBAR cases. So folks, if you're a tax professional, and this is often what happens, this is where a lot of people send things. Tax professionals often reach out to me. Hey, look, I have a client with something foreign. I'm not sure if I did it right. Can you take care of it? No problem. Hey, look, it's a hard thing to get right. Because these things are out there, and the IRS is utterly out for blood. One more quick story on this. IRS Form 5471. That's one where the IRS will assess that penalty even if you don't have a foreign corporation. There's another one. They'll just do it, and they love to do it because, again, it jacks up the penalties. And by the way, there's a tax court decision that says the IRS actually has to sue to enforce that, but the IRS is ignoring that. They're just going through regular collection. So the IRS is acting, just totally, they're making up their own thing. So it's one of the greatest outrages here. And this is where the FBAR fundraiser, Mona Lisa, absolutely, that's what it's about. It's the FBAR fundraiser that allows the IRS to get a lot of money that it claims with not a lot of work. And this is the other thing too. The IRS is much harder on individuals than businesses. They actually punish individuals harder on all these penalties. So it's disgusting.
Think about the elderly client that I sent you, right? On FBAR, right? She was retired, little old lady in her 70s, dual citizen, right? She had not a clue. She inherited money from an uncle overseas. Didn't have a clue. Coming at her with a vengeance, right? So.
Oh yeah, and that one we had to fight from 2009, I think, is when you sent that, and then we had to fight tooth and nail because the IRS wanted to take half. The IRS wanted to take about one. I think at that point it was about a little over a quarter of it. We fought tooth and nail over the years, and we lowered it. We spent, I think, about $40,000. Still too much, but not the hundreds of thousands of dollars that she was looking at. And I mean, that took us a lot of time.
Right. And how many times have you told me, we've done other podcasts before where you file the FBAR form and nobody's looking at it, right? It just ends up in a pile somewhere in a drawer. But if you don't file it,
it's the fundraiser. Yeah. So that's just sickening what's going on. So yeah, just again, be aware of that. No, you know what? Let me get my email up here for anyone facing that right now. So if that's something, I'll put Yael's up too as well. So this is my email. If that is something that is going on, aparent@irsmedic.com. It is incredibly obnoxious, and it's just an area where I'm really passionate. I think threatening the livelihood of anybody is really sickening, but somebody who's at the end of life. And, when it's difficult, my mom's not in great shape right now. She's going through a lot of, the things that's a broken hip and convalescent home. And, it's not, it's a time the family needs to come together. This is what I think about. What if my dad had to deal with an FBAR issue? Well, assume he's not a tax attorney, but assume my dad wasn't a tax attorney. Well, what if he had to deal with that? What if he had a looming penalty that could destroy everything that he's worked hard for? That's really what's so sad about this. And it's just so out of control. So let's move on to the rest of this here. Helping taxpayers through improving compliance selections, protecting taxpayers and businesses from aggressive scams and schemes. Well, the IRS is the most aggressive scam and scheme that they have. Their FBAR penalty fundraiser is an incredibly aggressive scheme, and the way they audit is an incredibly aggressive scheme because they go after the people most likely not to fight back. And I think that gives you your strategy if you're looking to get, if you're looking for how do you protect yourself, you know what? Carry a big stick. Carry a big stick is my advice. Yael, what do you say about it?
Yeah, have a great tax attorney, either you or myself, with our niches, to protect you, to fight for you, because the little guy, if you try to go at it alone, you're going to get killed. You just, honestly, figuratively speaking, of course, but they'll just run right over you. Unfortunately, taxpayers who aren't in the know think that they're going to get some, someone in collections or somebody that's going to, be very nice to them on the phone and get all the information from them. And yes, we want to help you resolve this issue. All you have to do is call in and no, I mean, I have a client now who got put into a $500 a month payment plan, and it's not a big balance. It's only about $9,500, But his financial advisor says, you can't do that right now. It's going to ruin all the plans of what we're trying to do, and you're overextended. And I'm looking at his financials that he sent me. He should be paying much less a month, let alone he should probably be in an uncollectible status at this moment. And I know it's only $9,500, but he's paying child support. He's still making payments according to his bankruptcy plan. But I said to him, I'm like, did you give the IRS any financial information? No, they just told me this was the minimum. They offered $500 a month. We could.
Oh my
Oh my
God.
God. I mean, there's just
Listen, and even though it may cost him several thousands of dollars for me to do the financials, and it's worth it to him to get into an uncollectible status, to defer any sort of payment to the IRS for the next 2 years, so that he can successfully complete his bankruptcy plan and everything else that he has in place.
Let me just get your website up there for people so they know how to contact you, Yael, IRSAngel.com, the IRSAngel. If you're joining us right now, we've been going over the latest IRS press release, their new enforcement. We're going it bit by bit, telling you the truth of how it's actually working, what's really going to happen, and how to defend yourself. We're almost done with this press release. We're getting near the end. It's been going on. Okay, so here we go. In addition to expanding compliance attention to high income partnerships and others, the IRS, well, that's a weird thing, and others, whoever we feel like, okay. The IRS will focus on ensuring audit fairness. Well, we just discussed how that's impossible. We just discussed how it's not fair, in protecting taxpayers from a variety of scams and schemes. The IRS being the top scheme and scam. And I mean, the IRS is showing their scheme. They're explaining their scheme about how to hit people who can afford the least to fight back, and how they're just going to give up the ship to anyone who's got a great defense.
Well, they do tell you in plain sight, right in front of you, what their plan is, what they're going to do.
There it is. Yeah. While IRS correspondence work will be increasing on the wealthy. Wait a second.
Compliance, right?
IRS
will be increasing on the wealthy.
Okay. So while IRS compliance work will be on the wealthy, the IRS will be focused on ensuring audit fairness and protecting taxpayers from a variety of scams and schemes, while the IRS compliance work will be increasing on the wealthy. Scammers and fraudsters frequently target average taxpayers with more modest incomes. So the IRS will be focused on raising consumer awareness of these issues. Wow, there's some irony right there. I don't even, my irony meter just broke. So the IRS is saying,
you saw the email I sent you about the IRS phishing scheme that I had gotten in my email address, which I thought was pretty hilarious.
So the IRS is basically going after people with modest incomes, and that's basically what they're showing. People, they can't go after the wealthy unless the wealthy leave themselves without very good tax strategies. So they're left with people who are unsuspecting, and that's what we know. But here the IRS is saying, yeah, these fraudsters are wait, this is what it is. This is what I got it. The IRS doesn't want these fraudsters to scam people with modest incomes because the IRS wants it. It's actually just jealousy. Like, no, don't go for that scam. Go for our scam. I think that's really what it is. Oh God, we're still going on here. Oh my God. This is what I underline. This is rich. I underline this because the IRS is on the side of taxpayers and will be working to protect hard-working taxpayer people from scammers or fraudsters who try to use the tax system for their schemes, whether it's promising people inflated EITC amounts or tricking people into tax-related identity theft, Wolf said. Protecting hardworking taxpayers is a critical component to ensuring the success of the nation's tax system, and the IRS will be working throughout the fall and into the 2024 filing season to take steps to help people. So here's an example of how the IRS is completely full of it, because this is the lie that they're promoting. The lie that they're promoting is that, well, hardworking people we're going to be fair with. Well, what's the implication? Well, people who we consider not to be hardworking, we're going to hammer. So why is your tax, why is the level of enforcement somebody gets determinative by what you perceive their work effort to be? Why are you even concerned about that? What if someone's not working there? They made a ton of money and just sitting at the pool. Why should that matter? And the fact is, it doesn't matter. This is just regular class warfare BS they're pumping out there to get you mad at someone else while they go for you. They're going for you. It's not the big guys. The big guys know how to defend yourself. The smaller people simply don't, and they're exposed like everybody else. So, do you, Yael, do you think they're out there to protect?
No. Bluntly, no. You know, I think this is their optics, right? This is their propaganda, the message they're putting out there, the optics. You know, they think this is what people want to hear, but does anybody really believe it?
I hope not.
Yeah. All right. So let's talk about, there's going to be improved equity in audits. Well, well, you just said, wait a second. You just said working class people, we want to, kind of give them a break. So the wealthy we want to get. So you want to give disparate, you want to have different treatment depending on how much the person makes. That is, you're going to apply the law differently depending on how much they make. Well, the law should be the law regardless. You have your progressive rates. I understand that. But should we apply the law as a law, not like, well, they make like, so we should hammer them hard. Well, we feel bad for them, so we should take it easy. So wouldn't you say that this can't possibly be true? And they've sort of undermined their own claim that there's any sense of equity or fairness. Would you agree?
Yeah, well, look, just the paragraph above, right? They're working to protect hardworking people, but in the next paragraph, they're still focusing on the audits involving the least earning class of people with the earned income tax credit. So, you protecting them or are you going after them? I think you're muted, Anthony.
So emerging scam issues, the IRS will continue its aggressive work warning customers about emerging schemes and scams, building off efforts like the Dirty Dozen. The IRS plans to warn taxpayers about quickly emerging scams. They just say that? As the IRS has seen through the years, scammers frequently adjust or change their tactics to tag onto recent tax law changes or other events that confuse taxpayers. Having a hard time with that, into trying to claim refunds worth thousands of dollars. The effort can touch on issues like sick leave and family leave, as well as false fuel tax credit claims. Oh man. Well, where's the number one source of tax confusion about the income tax come from, Yael? Where do you think the number one source of confusion is?
Yeah, from the IRS. They're not really one to protect to provide clarity, right? We're still waiting for clarity in crypto.
Right, we're still all over the
right.
All over the place, and that's that the IRS is still a lot of decisions, and especially in the realm of say foreign pensions. We're waiting for, hey, how do you want us to treat this? They don't even want to address it. They don't even want to address certain issues, and they leave it up to taxpayers to guess. We're trying to get things right, but you're not really giving the clarity that would be necessary, and they intentionally don't answer questions. So the confusion itself comes from Congress. Then the confusion comes from the IRS, who won't claim what the tax system is, what it is. It's a way as to extort money out of you that you don't want to pay. If they were honest about that, then they could be more honest about how they work, but they want to act like the tax code's a good thing. It's a good thing and it's here to help us, which it simply can't possibly be the case. It's an adversarial relationship. When we call the IRS, we're calling the IRS as either representatives or captives of the system. We're not calling them, as their hold indicates, as customers. We're calling them as captives, and they are the number one source of all the confusion. Protection against identity theft. The IRS will continue to have the groundbreaking efforts of Security Summit Initiative, a joint effort between the federal government, state tax agencies, and nation's software and tax professional communities. Since 2015, the private-public sector coalition has worked together to build internal defenses and share information to protect against identity thieves trying to steal tax refunds. A key part of the Security Image Summits has been focused on raising taxpayer and tax professional awareness of how to protect themselves and their tax data from identity theft. This groundbreaking effort will continue this fall with the Tax Security Awareness Week. Now that took us a little bit of time to get through, by the way. So I want to just mention this. This is utterly infuriating. Okay. Because we have a tax system, by the way, we were going to get our Social Security numbers. We were told that was just for Social Security. It would never be used for a tax identification number. Of course, that happened. Now, of course, this was before most of us were born, but they lied to us about what a Social Security number was. And now that Social Security number is your tax identification number. And now if you have that tax identification number, now that's the tool which allows someone to steal someone else's money. So wouldn't the problem be the tax system to begin with? That the real reason why it's like the tax system creates the opportunity to make identity theft profitable. Without the tax system, identity theft really wouldn't be the issue it is. But with it, oh yeah, it's a total nightmare that could really impact someone's really mess someone else. Yael, have you had identity theft cases?
Yeah, I have. And we talked about one of them last week. They're stuck in limbo. You know, I've given missing returns to the IRS said don't file, 2016, 17 until we resolve the identity theft issue of 2015. 2 revenue officers are signed because they moved from New York to New Jersey. Some, all their transcripts say tax returns secured. Only one of them or 2 of them have been processed, and it's been a couple of years. He can't resolve, his tax filings. He can't go through bankruptcy because the returns have not been processed. No passport to be able to travel because he can't resolve the outstanding liabilities. You can't get the taxpayer advocate because they're just still dealing with 2021 returns, let alone anything prior to that. They're just stuck. They're just completely stuck.
Again, and I think it goes back to the IRS not wanting to take responsibility. It's just simply that. The Congress created a whole tax regime that makes identity theft possible and profitable. Really. I mean, that's actually the truth. Without the IRS, without your Social Security number, it'd be much more harder to steal and more profitable to steal someone's ID. But with it, really is. And then when it happens, where's the IRS on helping you resolve it? Well, they're overwhelmed. And so then you go into you are a victim of the identity theft, and then you're a victim of the IRS. And what do we get? What do we get? Is the IRS say, oh, you know what, before we go on and add more cases to our inventory, before we create consequences for people that we're not going to address, they're not going to address these issues. Let's throw a whole bunch of more people into the same situation that we're not going to address. And so, it's what else would you add to that?
I'm really amazed though how many people are so willing to send their financial information via email as a PDF, right? During tax season, the tax returns that I prepare, I send it to them through a secure encrypted portal, even just a site like mailbigfile.com that's free. You could just send them and at least it's secure. They have to download on the other side. But a lot of the times taxpayers, before I even get a chance to do anything, they'll send me their W-2s as a PDF. And, if your Social Security is not marked out, anybody could hack my email, their email. I mean, it's just so easy, I think, for those that are scammers, that are hackers to get your financial information and create some sort of identity theft, And I'll tell people you're better off. I have an eFax. You're better off sending it to eFax because it goes from your fax to my fax than just sending it as an attachment through a PDF, And so at the end of the day, then the IRS is coming after practitioners, I think, for securing, their clients' information and keeping things secure. But I don't always have control over what my clients email to me.
Yeah.
Right?
How
many times do you give your clients instructions and they don't really follow them anyway?
Yeah, the IRS creates the conditions to make identity theft the most profitable. And then they can't help you, and they often can't help you resolve it and can put you into a hell. And they could take adverse action against you for something you had no control over because your identity theft could have been stolen for no reason really you had control over. And it's a larger issue that that I think that really requires us to take a look at really what is going on. Really, why do we need such a complicated tax code? Who is the person pushing for something so complicated? Did you ask for this? I didn't ask for this. And the consequences are great. And the IRS is just, I think, acting incredibly irresponsible. And that's really the word I would say, incredibly irresponsible.
It'll be very interesting to see how all of this AI comes into play, considering they haven't been able to update their archaic computer systems in decades, but all of a sudden now they're on the forefront of technology using AI. Really? What could possibly go wrong?
Yeah, and that's why I think they can use so for small little tasks they can use AI. And as we said, identifying crypto, it's like, okay, that's a good place. Using AI to fix their entire broken system, no. That's just only going to make it worse. You know where it is, and this is my understanding. Still it is. The IRS still uses. There's a lot of COBOL programmers that form a lot of their backbone, and those COBOL programmers aren't about to make themselves obsolete. And so they actively fight the modernization of the entire IRS platforms, but it will always take the money. They'll always take the money to improve the tax system because if you look back, I think it was Jimmy Carter. He was going to, oh, here with this funds, we're going to modernize. And that's always gets more convoluted, crazier. Yeah.
I mean, I think some of the money they receive would be better spent on better training, having the veteran revenue officers really train the younger ones efficiently to get through cases and close cases out. There's a bottleneck, obviously. And I think they're better spent making themselves more efficient than using AI and everything else to bring in and close the tax gap. That's not helping. What's causing the problem is not being able to close out all the existing cases.
There you go. Well said, Yael. I love your analogy. We have bottlenecks in the IRS all over the place, and using AI just to put more things into the bottle is just going to create a bigger bottleneck. And it's so the IRS needs to get to the basics. You need to get to the basics. You need to restore some semblance of faith in the tax system. When people who've never had problems with the IRS before do everything they're supposed to do, they have problems, along with the people who get caught up by reality. When everybody ends up with the problem, the IRS is the biggest problem. And I think, the undermining, when it's a deal with the devil, and this is really, where I would say is really with our expat clients, so many of them are looking as like, well, look, I haven't been in the US tax system. Should I do it? Well, where's the persuasion from the IRS when they're so utterly incapable of handling cases in a responsible, timely manner? Where's the incentive to do that? Wouldn't that be building the tax gap greater? That you're convincing people who would normally be in compliance that actually might do you some harm to be in compliance. Wouldn't that have a bigger impact on your overall compliance?
I agreed. Completely agree. You're muted.
I am muted today. We went all over time today, and I think it was well worth it because what an important discussion that we had today. We had a lot of great comments. Mona Lisa, thank you so much. Yeah, absolutely. They love the ambiguity. The IRS loves the ambiguity because it gives them power to apply the law depending on who the person you're talking to is. If it's somebody who's powerful, all right, you'll just sort of go away. If it's somebody who's not, you'll go after them with everything and tell them what they can't do. So here it is. This is really what we're seeing, the culmination of so many bad things. The IRS is just doubling down on everything wrong that they're doing, and they're still going with this class warfare nonsense that, by the way, is attacking in their own admissions. Yeah, we've been attacking the working class the most. I thought that was a whole opposite of what the progressive tax regime was supposed to do, but never mind. The IRS has different rules. So this is what I want to say. Join us. I'm going to give closing remarks to Yael, but I want you all to join us next week as we talk about some real great crypto strategies, what to do in a crypto audit, and then how to avoid, and if you're audited and you don't have a lot of things, and then how to minimize your taxes if you are invested in crypto. So Yael, are you excited for that?
I am excited. It's crypto is my new passion. So we will definitely talk about how crypto is taxed, how the different cryptocurrencies airdrop, staking rewards, things like that, all the different things that you can be invested in crypto, how the IRS at the moment or up until now had been treating them, how to report it, what to do if you haven't reported your crypto gains the last couple of years, the couple of options that you have, and maybe some tax strategies in terms of putting them through businesses, or if you own a business versus just being a personal investor in crypto. So there's a lot of different things that we can touch upon. And, if anybody has questions about, I'll probably just give a brief description of what crypto is, because a lot of people, baby boomers, older generations, don't necessarily understand the technology behind it. So there'll just be a quick little talk about that, because crypto is here to stay. It's blockchain technology that's here to stay. Your banks are already using it as their infrastructure. There's a complete shift going on in our financial system that people just really aren't aware of. It's not just Bitcoin, Ethereum. It's the technology of how, and why it's here to stay and how helpful it will be. Everything will be on a blockchain. Everything will be tokenized. Your medical records, your voting records, your land records, everything, which it's great. It's great. But, there is a portion of it all that has to do with investing in Bitcoin and Ethereum and the other tokens. And you have to know there's not a lot of clarity yet from the IRS. Or the SEC. You're muted.
There we go. I had to get that comment back up there. They must love ambiguity, right? Absolutely. So I want to just thank everyone for joining us today. Be sure to subscribe and turn on those notifications so that you know when we're going live, and then you can interact with us. So I want just once again for Yael Lazar. This is Anthony Parent of IRS Medic, and I thank you for watching.
See you next week.